Okay, so welcome to the first video on our section number 2, Technical Analysis Principles. This is the Trading with Price Action and Volume Profile course. So in this section or this lesson, we're gonna first start with the very basics of technical analysis. And first, we're just gonna discuss the most popular types of charts that we have access to. So there's many different ways to interpret price. At the end of the day, any chart you look at, all you're looking at is the interaction of buyers and sellers, and you're comparing a graphic where you have a time element, which is the horizontal axis. The date and times are always on the horizontal axis, and then you have a vertical axis with prices. And so the three most popular types of charts that we have would be the line chart, which, as the name says, is basically a single line that we just see advancing from left to right, giving us the price at that very moment in time. After that, we have the bar charts, where bar charts are especially favored by more old school traders, since a lot of the older traders started learning and developing when bar charts were more the norm. And bar charts, basically, as you can see, in this case, we have red bars for bearish candles, green bars for bullish bars, and basically the little indentation on the left is going to be the open price. The indentation on the right is going to be the closing, and then we have the peaks of the highest and lowest points as well. And then finally, the third type of most popular chart, and I would say the most used by traders everywhere in the world, is going to be the candlestick charts. This is going to be the one that we are going to focus in on this course, and this is the one that we're going to start describing now. Let's just go 1 second quickly here. This is the TradingView platform, and so let's just compare quickly the different types of charts that we were discussing. So right here, if we go in this, you can see up here, this is a line chart. So basically, we have the dates and times right here at the bottom, and then on the right hand side, on the vertical column, we have prices. This is again the S&P 500 index. This is the CFD. We'll go over more CFDs, but CFD is basically a type of derivative that's based on an underlying asset, which in this case would be the 500 biggest companies in the stock market in the US. And so you can see basically, this type of chart is really, really basic. All we're looking at is how price advances from left to right and how it just moves up and down. After that, we have, like we said, bar charts right here, which give us a little bit more detail, because now we can see where price opens, where it closes on this specific time frame, assuming we are using time-based charts, which for all intents and purposes of this course, everything we're going to talk in this course is going to be time-based charts. You can go check out, I'm going to put a link on the resources section of this video, and I'm linking a video that I released on YouTube where I go over all the different more popular types of charts, and I go over not just these three, but I also talk about other charts, for example, Renko, Heikin-Ashi, volume bars, etc. So definitely go check out that complimentary video. So that's gonna expand more into this concepts of type of charts if you want to learn more about them and the different types of charts that we have available. So this is again bar charts favored more by old school traders. And then finally we have candlesticks, which is what most of us are used to using. This is the most popular type of chart that we have. And again, for all the examples and purposes of this course, we're going to use time-based candlestick charts, because you can use candlestick charts based on volume. You can have range candlestick charts. You can have tick-based charts, which just measures the amount of trading activity that's going on, and that's the type of charts that I use a lot in my intraday trading, and I go over those type of charts on my day trading with volume profile and order flow course that I also have available through my website. You can check that out. But again, we're pretty much just going to focus on candlestick charts on this course. So let's start by talking about what is a candlestick chart and how we read or interpret them. So first, in terms of coloring, people sometimes change the colors to whatever they like personally in their charting platforms. But in general terms, bullish candlesticks are usually going to be represented in green or white, and bearish candlesticks are going to be represented in red or black. Okay, and what are the different parts on them? Well, if we have a green bar, a bullish bar, that means that we have the opening right over here, and there's actually two different elements to this. We have what we call the wicks, which are the lines sticking out from the blocks of the candles, and then the actual block part of the candle. This is what is known as the candle body. So every candle has bodies, and sometimes they have wicks. In this case, we can see that this is a bullish candle, so that means that price opened at this level. We went all the way down here, so this is the bottom wick. Then we pushed up all the way up here, so this was the top wick, and then we closed right over here. So bullish candlestick, the open, it's always going to be below the close, because obviously that means price increase in this time period that the candle was formed. In reverse, we have a bearish candlestick, and in this case the open is at the top of the body, the close would be at the bottom of the body. You can see in this case there's no wick. What does that mean? Well, that means that this candlestick, on whatever time period it was, we had a very bearish bar with a lot of strong selling, and we closed the candlestick right at the very low extreme. And then on top here, we have the top wick of this candlestick. Same thing would be here in these examples. We got a small candle body that is bullish because we have a close that is higher than the open, and then we have a big low wick, and with the extreme low point here, and a large top wick with a extreme high over here. And then the same thing for bearish candlestick. In black, we have the open at the top of the body, close at the bottom of the body, and then we have the lowest value of the candlestick and the highest value of the candlestick at the wick. Now let's go back here into trading view, and here you can see how we have candlesticks. And you can see most of the time, and we'll go over the exceptions when we talk about gaps later on, but with candlesticks, always, you can see, for example, here, we have a big red candlestick here. So we had the open right here, the close right here. So always, this is a 1 hour chart. So that means after 1 hour passes and this candle closes here, the next candle is always going to open immediately next to the close of the previous candle. Then this was a bullish candle. We closed up here. And then you can see that the close of this candle, then the next candlestick on the next hour is going to open right next to the close will be the open of the next candle, which in this case was a bearish candle. Let me zoom in even more so it's easier to see. So you can see how the open and the closes of candlesticks, or sorry, the closes and the opens always coincide at the same levels. And then for each candlestick, you can see how we have all the bodies, and then we have the extremes of the wicks. And now for these values, all charting platforms have this option in TradingView. If you go on settings and you go on status line, you can see this right here. It's going to appear right over here. If I mark this, this is open, high, low, close values. So as you can see, as I drag my mouse over the chart, every candlestick that I'm on top of, these values are going to change. And what this is going to tell us is exactly for this specific instrument that we are analyzing on whatever time frame we are. We can even go here into a 5-minute chart, for example. You can see that wherever my cursor is over each candle, those values right over here are going to change, and they're going to let me know for each candlestick exactly what the opening price was. So that means the top, let me zoom in just so it's easier to understand. Let's say we're going to talk about this candlestick right here. So if I put my cursor over here, you can see how we have values of open 4704.7. So that means that's the open at the top of the body, because this was a bearish candle. Then we had a high of 4704.9. So that means that's the extreme of the top wick. That's the highest price we achieved on this 5-minute candle. Then we have low 4702.9. That means that was the very bottom of the candle. And you can see how in this candle we don't have a bottom wick. So that means that the low and the close, as you can see over here, are both 4702.9, meaning that this was a very bearish candle. So right to the end of the 5 minutes that it took to form it, we were pushing at the very lows. So we have the same value for the lowest point and the close of the candle. Okay, and the same thing with any candlestick on any chart you're using. Any platform is always going to have this option where you hover over candles, and then it's going to give you the open, high, low, close values for each. Okay, so now what is going on inside of a candlestick? Because once you look at a candlestick, you know, you have the open, high, low, and the high, low, open, and close value, because as you can see, this is a bullish candlestick. So let me bring in my marker tool. So then right here we have the low, the high, open, close. This can be whatever time frame. Let's say this is a 1 hour candlestick. But now, what happens during that hour? Well, that's something that we can only find out if we start going into lower time frames, so we can look at what happens inside of this, because this is, for example, the path that price might have taken here. We know we opened here, maybe the market moved up, came down all the way. We know this is the bottom, so that's definitely the lowest point that we achieved. And then we could possibly have gone up again, came up. We know this is the highest value that we reached here, and then we know we came back down and we closed right over here. So, you know, as you just gain experience, you'll sort of have an intuition for how price moved within the candles. But the best way that we can determine how price moved is by analyzing different time frames. So let's first define what time frames are. A time frame refers to the specific time period that each individual candlestick represents on a chart, assuming we are using time-based charts, like I said, which in this course we're only going to be using time-based candlesticks. Price is fractal, meaning you observe the same behaviors and structures being repeated on all time frames. Therefore, you can apply the same trading patterns and analysis no matter what time frame you use. So this concept of fractal means that price behaviors are repeating on all different markets on all time frames, and then this repeating behaviors is what we use to, as we'll see later on, try to use patterns that we can use to exploit, things that we observed already have happened in the past and that could be repeated in the future. Patterns, higher time frames will always carry more importance when it comes to time frames for the overall market structure, and should be used to determine the prevailing trend. When we're talking about higher time frames, at least me personally, I'm referring to 4 hour or higher time frames. So 4 hours, 12 hours, daily candlesticks. I personally use 4 hours and daily candlesticks the most when I want to just get a sense for the higher time frame trends. Once you grow accustomed to looking at charts, you will learn to interpret how there are candles of lower time frames contained within candles of higher ones, and vice versa. So, what do we mean by this? Well, we can see here how once we start drilling down into different time frames, then we know how price actually moved within a chart. Here we have a forex chart of Euro US dollar. First, we have a daily chart right over here. So what can we observe on the daily chart? Well, we're going to be focusing on this big green candlestick right over here, this bullish candlestick. And we can see that this daily period, if we now move down into a 60 minute candlestick chart, we can basically see that this bullish daily candle is going to be represented by 24 hourly candles if we go down to a 60-minute chart. Why is that? Well, as we know, Forex is a 24-hour market 5 days a week. So every daily candlestick chart in Forex is going to be made up of 24 hourly candles. Then these hourly candles, we can also divide them into 15-minute charts. So if we take all this 15-minute candlesticks, then we know that each hour is made up of 4 15-minute candlesticks. Each day, therefore, is going to be made up of 24 times 4 would be 96 15-minute candlesticks, etc. We can go down into 5 minutes, and just from there it's like, you can keep it like the Russian dolls that you just open and they're smaller and smaller inside. Well, the same thing happens with price in charts. You can zoom out or you can zoom in and just look at what's going on inside of this chart. So then here, this bullish candlestick that we have here, once we analyze this on the lower time frame, well, what can we see? We can see that price opened up at this level right here. We made a dip and moved down, and that's how we formed this bottom wick that we have. We moved back up, and then we can see we got all the way up to this point and had a small dip right at the close, which is this tiny wick that we have represented here. Okay, the same thing if we go, let's go into a live chart here and just go over this concept again. So let's analyze, for example, this daily candle, which, as you can see, has a really, really tiny bearish body and 2 very big wicks. So let's analyze what is going on. As you can see from the date, this candle is from January 4th, 2022. Let's split the screen here, so that way we can look at what happened inside of this. So let's synchronize the symbols. No, we're gonna go into the S&P. Okay, so in this case, let's go into a 4-hour chart. So this is the day in question right over here. So if we zoom in here, we can see how this market we have one, two, three, four, five, 6 candlesticks. Actually, let's look at the future. Let's look at this is the continuous future contract for ES, which is based on the S&P 500. So let's actually look at this one here. So we are interpreting this day. So as you can see, we had the daily candle right here, bearish. And then if we go into here on the 4-hour chart, we can see how we have 1, 2, 3, 4, 5, 6 4-hour candles. So that means we have 24 hours of action right here, which, well, in the futures market, we're technically open 23 hours a day. There's a 1-hour pause, but that's, a topic for later. Basically, if we go down now into a 1-hour chart, we can pretty much see what we have here. Now we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23 candles. So like I said, This is the 4 o'clock futures is closed from 5 to 6 p.m. Eastern time. So we're open 23 hours. So in this daily candle in futures, we had 23 hourly candles. And what can we observe here? Well, we can see we open right here. Price then went up all the way here. We pushed back down, and then we pretty much closed almost at exactly the same point as this. This vertical lines that you see here in TradingView, this is the session breaks, which I always like to have enabled. So these vertical lines basically indicate when each day starts and ends. And so you can see from this how then this individual day started here, ended here, and now we can see as we drill down, we could even go into a 15-minute chart. If you want to see this in even more detail, you can see all the movement of the market here and how this daily candle was formed. And we got our open, our close, our low, and our high for our daily candle. Okay, so that's pretty much that concept. And then just to finish off this lesson, going back to the concept that price is fractal, you can see here I just have examples of several markets on different time frames. This is Forex pound dollar daily chart. This is pound dollar 60 minutes and pound dollar 5 minutes. And what you can notice is all these different time frames, we're observing very similar behaviors. We can identify trends, we can identify swing points, etc. on all these different time frames. So the concept that price is fractal basically means this, that we can observe similar behaviors and patterns no matter what time frame or what market we are using. Okay, so that's pretty much it for this lesson. In the next lesson, we're going to start talking more about what market environment and structures are, etc., and just keep advancing into more topics regarding technical analysis basics. See you all in the next lesson.